Many so-called scholars and historians think the United States is a secular nation. They're wrong. They are either misinformed or intellectually lazy if they do not know this by now. The United States became great because of our religious values led our government to respect people's individual rights, just like Mark does, just like he does in every stock market jobber report, and this is his. Professor Mark presents this to you today, April 17th, 2023.
Alrighty. Thank you there, President Washington, Mr. Washington, Mr. President, General Washington. You are one of my favorite people in history, as all our Benzinga Trading School students know. I have a huge portrait. Actually, I have two pictures behind me. One is of your portrait, and one is of you crossing the Delaware. You know, this country would not be what it is if it wasn't for George Washington. They wanted to make him a monarch, right? 98% of other people who've ever lived would have been like, oh, yeah, I'll be your king, I'll be your monarch. But he knew he was so brilliant. He knew that it was important that the future relied on having the military under civilian leadership. So, anyway, President Washington, I'm glad you're here, and I hope you enjoy our little walk through the financial markets. I mean, we know they had financial markets when you were around. As a matter of fact, they were formed in the modern version, at least in the United States, after the Revolutionary War, and you were smart enough to put Alexander Hamilton in charge. But let's talk about market principles, all right? Basic market principle. It is what it is. It seems simple, but it is the key to making money. Understanding that some price levels are more important than others. We will see this on numerous occasions as we review the 11 sectors that consist of the S&P 500. These are called support and resistance levels. Now, at a support level, there's more demand than supply. If a market is trending lower, guess what? There's not enough demand or buyers to absorb all of the orders. So the sellers are forced to offer their shares at a discount. This forces a downtrend. When we get to support, the tide turns. For whatever reason, all of a sudden, there is enough demand. The buyers come out of the woodwork. And a lot of times when we get to support, we reverse, and we will see why. Now, when the market's trending higher, there's not enough supply to fulfill, or not enough supply or sellers to fill all of the demand or buy orders. So buyers are forced to pay a premium. So these are the opposite. When we get to resistance, there's a large concentration of sellers or supply. Prices stop going higher. Markets tend to pause or halt or reverse when they get to a support or resistance level. Now, a level that was resistance can become support. A level that was support can become resistance. This is a basic understanding, and you can see it on pretty much almost any chart. And this has to do with market psychology. And if you look at a chart, you need to look at it through the prism of what does this tell us about supply and demand. If you're not doing that, then you are not going to be able to be a good trader. At least in my opinion. I mean, maybe there are other people that can or are, but in my experience, and having traded with some of the greatest traders literally in the history of mankind, I think I could speak with authority. So these levels might retain their importance for a long time, months, even years. This is called market memory. A level that was support might stay intact for a long time. A level that was resistance might stay intact for a long time. A level that was support can become resistance. A level that was resistance can become support. All right, so let's take a look at the S&P. Now, this is where we like to start our weekly analysis because this is the most, probably the most important. Well, I would say this is definitely the most important benchmark or indice. When I say benchmark, I mean that in the institutional trading world, I know everyone's fascinated with hedge funds, but there are other institutional traders like mutual funds, standard, traditional institutional money managers. You got to be judged against something. You can't just give someone money and be like, oh, is it good? Is it bad? Well, they're measured against a benchmark, and this is the most important one. It's the most broad. So basically, if your returns are better than the S&P 500, well, you're doing a good job. If they're not, then you're doing a bad job. So what we're looking at here is the SPDR ETF, an exchange traded fund that is designed to track the S&P 500. Unless you're like a big institutional trader that trades futures, you can't trade the S&P 500, but it doesn't matter. This is good enough. Okay, a lot of institutions trade SPY. Now let's check this out. This is what I talked about before. Support became resistance. How is it that a level that was support turned into resistance? Well, buyer's remorse. Remember what I just told you. Charts are a picture of psychology. People bought here, price goes lower, a lot of them regret buying, and they tell themselves if they can get out of break even, they're going to. So you have these remorseful buyers placing their sell order at the level that was support. If there are enough, the level that was support can turn into resistance. That is what happened here. Now, here is the opposite. Resistance becomes support. How can this happen? This happens because of seller's remorse. There are people who sold here who regret doing so when the price moves higher, and they tell themselves they want to buy their shares back. But they're only going to do so if they can get them for the same price they sold them at. So if you have enough remorseful sellers placing buy orders at a former resistance level, resistance can turn into support. So buyer's remorse can turn support into resistance. Seller's remorse can turn resistance into support. We are looking at a graphical illustration of investment psychology. We are looking at a graphical illustration of supply and demand. That's the prism to look at charts through. So many technical analysts just suck, and they're just horrible, and they have no idea what they're doing. There's almost some that are just even an embarrassment to the name. Listen, the good traders, the good analysts, they focus on levels, trends, momentum, and psychology. They don't waste their time with things like, Gann theory or Elliott wave. That stuff is science fiction. I mean, if you could figure out a way to make money off of it, guess what? Start your own website and I will subscribe to your website. But I am pretty confident it's not going to happen. Now look at this, another principle. A level that was resistance became resistance again. Well, once again, we see the buyer's remorse. There are people who bought here who regret doing so when the price moved lower, and they tell themselves, gee, if I can get out at break even, I'm going to. So you got these remorseful buyers just waiting for the price to get back up to their buy level so they can bail out and break even. So level that was resistance can become resistance again. It's a very common phenomenon. This is our technology sector. And once again, remember, the S&P 500 consists of 11 different sectors. And by looking at the different sectors, you can kind of get an idea of what's happening with the S&P. Different sectors drive the market at different times. And if you know which sector is in control, it gives you a much better chance of making accurate calls as to which way the market's going. So we can see here, resistance became resistance. Remember, people bought here. They regret doing so. They tell themselves, if the price ever gets back up to where I bought it, I'm going to bail out. So we have remorseful buyers placing sell orders. If there's enough, the level becomes resistance. So markets tend to run into resistance at former peaks. And it's not astrology, it's just understanding investment psychology. Here we have the level that was resistance becomes support. Seller's remorse. People sell, price goes higher, they regret doing so, blah, blah, blah. They tell themselves they're going to buy their shares back if it gets back to their price. So what does this mean as a trader? Well, if XLK gets back down to 144, there's a good chance that there's some kind of a tradable bounce. And then, I'm not saying you got to trade XLK, but you just look within the sector. You could trade XLK, buy the options on it, buy the calls, or you could look within the sector at different tech stocks, because what we're looking at is an aggregate of the technology sector. Therefore, because we're looking at the aggregate or the average, there are going to be stocks that look better or look worse. So resistance becomes support. Seller's remorse. We can see here, resistance becomes support. Support becomes resistance. All right, let me bring General Washington back on. And, whatever. Okay, don't mess with me or talk to me about, religion this, religion that. I am not preaching a certain religion. I am just stating the fact that the concept that this government was founded under secular notions is just wrong. Just read the founders' documents. Okay, I mean, the Declaration of Independence. These rights are given to us from our Creator. Who was Thomas Jefferson talking about? If you don't have religion and morality, you have communism. If you have communism, what do you have? Starvation, deprivation. All right, it's like, who is it? Churchill said that. I'm not sure who said it, but like, capitalism is the worst form of government except every other one that's been formed. So I just think it's important to remember, and I'm not saying what my religious views are or if I have any. For all you know, I'm an atheist. I just think it's important to understand what the country was formed under, and people tend to forget it. Okay, General Washington, come on again, and thank you so much for being here.
Did you know every one of us founding fathers believed in God and an afterlife? It is true. And all you need to do is get off of your misinformed lazy keisters and read what we wrote, what they wrote, and you will see that we believed that divine intervention had caused this country, and we believed that it was our duty to follow that vision of God's and create a country where people were free, not only in religious freedom, but in speech, the right to bear arms, the right to not be harassed by their government, the right to not have illegal seizures of their property. America should be free.
All right. Very interesting. This will get even more interesting. Here's our healthcare sector. Resistance becomes support. Support becomes resistance. Resistance becomes support. So now that we have a sector that's at a support level, it's either going to break down or it's going to bounce. There's a small chance that it hangs out around 133.68 for an extended period of time. My guess is over the next week, this is either going to bounce up or go lower. When a stock or a market or an ETF gets to an important level, well, they don't tend to hang out there. They tend to make rapid moves. And that's where traders, that's what we're looking for. And we don't care if the move is up or the move is down. We just care that it's there. So when something gets to an important price level, it's like it gets to a fork in the road. And they usually don't hang out there for too long. I mean, look at this, right? Got to resistance, we go lower, right? All these tradable bounces. All right, let's go to our financial sector. Speaking of a sector that is at an important level, well, here are our financials. Support becomes resistance. Buyer's remorse. People bought here. They decide to get out at break even. They want to sell. They can get out. If there's enough of these sell orders being placed by remorseful buyers, it becomes a resistance level. And this is what's happened here. So here's another sector that might be on the verge of making a move. So you just got to kind of check back with Stock Market Jobber, because this is the type of stuff we talk about pretty much every day. All right, I am going to bring the general back on for some very interesting comments.
Of all the dispositions and habits which led to political prosperity, religion and morality are indispensable supports. In vain would mean that man, claiming in tribute of patriotism, should labor to subvert these great pillars of human happiness, these firm props of duties of men and of citizens.
Thank you, President Washington or Mr. Washington. Frankly, I don't even know what to call you. And you might say call you George, but I don't think so. You're a pretty formal dude, and I wouldn't even feel right calling you that anyway. But anyway, if I go back in time, you'd be one of the people that I met. So here's our consumer discretionary sector, and once again, resistance becomes support. Support becomes resistance. Now check this out. Notice how when we get to a resistance level, we tend to get this rapid sell-off. When we get to a support level, we tend to get this rapid buy. When we get to its resistance level, we get to make this rapid sell-off. Resistance, 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 resistance. All right. Now, why does this happen? Guess. Oh, did you say investor psychology? Well, if you did, you are right. Investors want to sell. Here. There's a lot of investors who like, all right, well, if it gets back up to that price, I want to sell it. But then what happens is they notice the price has stopped going higher. How could the price stop going higher? Well, the only reason why it could stop going higher is because there are other investors who want to sell. So they put a top on it. Now, some of these investors start to get worried that they're not going to be able to sell their shares. If someone else is willing to sell at a lower price, well, that's who the buyers are going to go to. The buyers are going to go to who's ready to sell at the lowest price in town. I mean, it's really just that simple. So they start to get afraid of things and they start to undercut each other. And you get the snowball effect. All right. Same thing happens when we get to support, but it's the opposite. The buyers start to think, oh boy, someone's going to step up ahead and be willing to pay a higher price than me. I better be willing to pay a higher price. Get to resistance, sell off. So as traders, this is what we're looking for. Things get to support or resistance, they make moves. It's not that complicated. People overcomplicate things. That like 5 years ago, all this AI garbage, it was like, oh, our fund is run by AI. It was so easy to raise money. The performance of all those funds that I know about has really been pretty dismal because AI is based on statistics and probability theory, and they presume people are rational, and they are not. So resistance becomes support. The vast majority, resistance becomes support. The vast majority of moves in the market are because of investor psychology. Okay, 98%. It has nothing to do with what they're saying on CNBC or Fox Business News. Those people are journalists. They don't understand the way the markets work. They hear something and they just regurgitate it. Look at this. Get to support, bounce. Get to resistance, sell off. Get to support, bounce. Get to resistance, sell off. Get to support, bounce. Psychology. This is not because, if you put on CNBC, they'd be saying like, oh, well, the market is up on, I don't know, what could be the market be up on today? Fears of interest rates easing. They always try to come up with something, and it's pretty bad. And it's not just a pet peeve of mine. It really bothers me because I believe that the media has lost a lot of money for people because they just give out information that's not right. Maybe they're honest. I'm not saying they're trying to rig things, but I like to say CNBC has lost more money for people than Madoff and Ponzi combined. And you know what? I would be willing to say that again. And if they don't like me, they can sue me. All right. I want to bring President Washington back on here for some very interesting comments.
The mere politician, equally with the pious man, ought to respect and to cherish them. A volume could not trace all of their connections with private and public felicity. Let it simply be asked, where is the security for property, for reputation, for life, if all the sense of religious obligation deserts the oaths which are instruments of the investigation in the courts of justice?
I agree. Without morality or without religion, there's no reason for morality. At least that's my opinion. Whatever. You take it for what it is. I mean, I'm not a theologian, I'm a trader, right? So I'm trying to teach you how to trade, not what to think. But I just want to put it out there that one of the reasons why the United States is a great country is because the founding fathers had these beliefs that individual people had rights. Communism means communal. The community counts for more. Stalin said the death of one person is a tragedy. The death of 3 million people is a movement. Think about that. It's pretty messed up. All right, so anyway, resistance, support. Sell off, bounce, sell off. Support becomes resistance. Resistance again, resistance becomes support. Resistance again, looks like we're selling off. Once again, when we get to important levels, things to make moves, and that's where we can make profits. So pay attention when something gets to a support level or a resistance level, especially if it's overbought or oversold. Overbought markets that get to resistance tend to sell off. Oversold markets that get to support tend to bounce. And you could just check out some of our lessons or whatever. Subscribe to our YouTube page because I talk about. I'm pretty focused. I focus on levels, trends, momentum, and psychology. That's it. I was in the institutional trading world for 20 years. That's what people look at least the successful people. Consumer staples, right? Support becomes resistance, support becomes resistance, support becomes A little not as clear down here, but that's a huge sector worth billions and billions of dollars. And look how tight this is. Ask a fundamental manager, oh, gee, how is it that the consumer staples sector had the exact same valuation in January or in December as it did in January as it does now? They're not going to be able to answer. They aren't. I mean, I'm not mocking them. Well, I guess in a way I am, but they are just not going to be able to understand. They're not going to be able to explain this to you. The only way you can understand charts is if you understand that what we are looking at is a graphical illustration of investment psychology and supply and demand. If you look at a chart through that prism, they are going to make sense to you, and they are going to be your map. That's your map to making money. All right, I think we're going to bring on the president one more time.
And let us with caution indulge the supposition that morality can be maintained without religion. Whatever may be conceded to the influence of refined education on minds of the peculiar structure, reason and experience both forbid us to expect that national morality can prevail in exclusion from religious principle.
Thank you once again for being here, General. Here we got our energy sector, right? Support becomes resistance, resistance becomes support, support becomes resistance, resistance becomes support. Now, how do you use this knowledge? Well, market's heading higher, and you're like, oh, I own this. I'm making money. Where should I sell it? Oh, this level was resistance or support before. Therefore, there's a good chance it's going to happen again. Just say you bought XLE down here at 77.50, and you tell yourself, all right, if it gets to 90, I'm going to sell. Well, maybe it breaks through and gets to 90. But if you do that, you're just guessing. If you let the market tell you what to do, if you look at the levels, the market's going to tell you, hey, man, there's a good chance this turns around 87.50. That was support, it was resistance, it was support, it was resistance. And this isn't like, it's not a guarantee or anything like that. It's just about stacking the odds in your favor and understanding what's important. All right, our utility sector support is now resistance. We're testing that.
People literally wanted me to be the king, but I knew the best thing for the future was to have the military serve under the people and not a monarch. Imagine being England again. By the way, Professor Mark's shocked, embarrassed, and ashamed that someone is so stupid and corrupt could occupy the house I established, the office I established. When Uncle Joe is forced to resign because he's pimped out his son and your office to make money, it will be a great day for America, especially our history. So let's pray to God that it happens. Look, man, I mean, you got the first sort of mainstream African American who is articulate, bright, clean, good looking, nice looking, I mean. That's a storybook. Come on, man. Listen, you just don't underestimate how bad Joe has his ability to fuck some shit up.
This is a pretty interesting chart here, the material sector. This is the smallest sector in the market. This is like, chemical companies, companies that make paper, boring stuff. But forget what they do. We're just looking at the principles. I mean, come on. You don't need to be a market guru to see that this 81 level has been important for 2 years now. It was support, became resistance, support, support. Now it's become resistance once again. If you know where the important levels are, you will know where to place your buy orders or your sell orders. You will not be guessing. And very last thing to look at here, our real estate sector, small sector in the market, once again, without, you don't need to be a market guru or a former hedge fund trader to see this. For some reason, the market likes this 37.25 level. Why is it not 37.40 or 36.83? I don't know. It's just the psychology, right? Psychology turns resistance into support. Psychology turns support into resistance. Psychology turns resistance into support. Psychology turns support into resistance. If you look at a chart through the prism of investment psychology and supply and demand, you will be able to understand it. It's not tea leaves, it's not astrology. All right, now I want to kind of just finish up here with one of my, well, actually, my favorite band, well, other than the Jerry Garcia band. But, the Grateful Dead were really cool. They understood 50 years ago how great our country is. And, they're not these like stupid, crazy liberals like we have now. They might have been liberal, but, they were capitalists and they made money. And I just think that's cool, right? You got the revolutionary soldier holding Jerry's guitar. All right, everyone. Thank you so much for tuning in. I hope to see you soon. And I hope you have a nice week.